So let's get started with one of my favorite strategies. It's a multi-time frame approach, and the only thing that we are needing here is the 50 period SMA. The 50 period moving average is one of the most important moving averages. You will see that this moving average is being respected on all the charts, on all the time frames, whether you look at Forex, stocks, even cryptos or commodities. The 50 period moving average, in my experience, is one of the most important. And what we are looking for at the higher time frame, we are starting here at a daily time frame where we start our analysis. We want to look for a market where you have a break and the first retest of the higher time frame moving average. So here the market has been trading below the 50 period for a long time. Here was the first time in months that the market broke above the moving average. Now the moving average is being retested, and it's important that we look for the first retest. So the first time the price action is back at the moving average after the break. And then we go to a lower time frame, and on the lower time frame the idea is that there we want to time our trades with the trend. So we determine that on the higher time frame where we want to look for buying opportunities, and then we go to the lower time frame and look for information and patterns and just general scenarios that we then can use for our trade timing. So here we are on the 2-hour time frame. You could go to the 4-hour, you could go to the 1 hour, even lower. And what we want to do here is we are looking for patterns. Those can be trend line patterns, it can be horizontal patterns, as we will see later. And here we have a very nice trend line when we connect the swing highs. And the idea is that just because the price is at the daily 50, it doesn't automatically mean that we're going to buy. We still need to wait for confirmation on the lower time frames. And the idea is that we want to buy when the market is breaking the trend line here. It's also the break of the last swing high. So when the market breaks this area, the price is making higher highs on the lower time frame, which is a very, very important signal. And this is what happened afterwards. You can see the market broke the trend line, broke the moving average, broke the last swing high, and then it traded higher for quite a long time, very extensively, and you could have potentially realized the big winning trade in a short amount of time. So it's in line with the higher time frame. Another example, the market was trading above the moving average here for a long time, traded below it, and then here is the first retest. By the way, the market also did that on the other side. It broke above it. Here was the first retest and a big move up. Now a break below it, first retest. So we go to the lower time frame. This is the daily, and then we want to look for short opportunities. This is what it looks on the lower time frame. Here we are on the 1 hour. Again, we have a very, very nice pattern, a trend line. We also have some type of head and shoulders here, left shoulder, the head, the right shoulder, 2 lower lows already. And the idea is we want to trade a breakout out of the trend line, out of the last low. And this is what then happens afterwards. You can see the market broke out, and this is where you have a new trend starting. And this is very important. On the higher time frame, your idea is that you want to trade a new trend to the downside. So your idea is that after the retest, the market will start a downtrend. And on the lower time frame, we are timing our trades with the higher time frame trend, but because we are getting in on the lower time frames, we often have a much favorable entry, because we can really pinpoint our entries. So we can get in early. Still, we have a lot of information. We have the higher time frame information, and we have the lower time frame pattern and momentum and breakout information. And then we can go with the trend early with an entry. On the lower time frames, we can then also use very tight stop loss orders to really optimize and maximize the reward to risk ratio. Another great swing trading strategy is a so-called trend exhaustion. And here the context, well, as always, is key. And what you want to look for is you want to look for a mature trend, so a trend that on the left side has been going on for quite a while. And then we want to look for signs that the trend is losing strength. Because when a mature trend is losing strength, a lot of people who were short here on the left-hand side are probably taking profits. They're exiting their trades because they have already made enough money. And for those people who want to buy, the price is finally low enough that it makes sense. So very, very often those exhaustion phases will help you find new trends and the beginning of new trends early on. And this is exactly where you want to get in. You want to get into a new trend as early as possible, because there the profit potential is at the highest. So here what we see is, we see that the market has made a double bottom. We also have here a pin bar rejection pattern, something that I've talked about in my price action videos here on YouTube as well. And here you can then see, after the breakout, the market is retesting it. So when you see such a exhaustion pattern, you usually have two options. First is you could trade it as a general breakout. So as soon as the market breaks out of the pattern and makes a new higher high, at this point, the breakout is signaling that, okay, now we are making a higher high, while the market was not able to make lower lows here. This is a very important signal. Or if you are not comfortable trading breakouts, or maybe you missed the first breakout, you could also choose a retest approach or a pullback. And this is how it looks afterwards. So the market broke out, made a move, came back to retest the previous highs, now as resistance. And if you are a retest trader, this is where you then could potentially enter the trade. So you have a few options on how do you find trades. You could also use this information to build a position. So you could take your first entry on the breakout and then add to your position on the retest. This is also a very, very important piece of information for stop loss placement, because obviously if you know that retests are very common, you will manage your stop loss differently. So you will not move your stop loss too fast, because if you move your stop loss to break even, this is almost always where you see the actual retests. So keep that in mind as well. And then how do you find your target? And one of the tools that you could use are Fibonacci extensions. And I will talk about Fibonacci extensions later in more detail. But what you want to look for is basically the first Fibonacci sequence into the trend. So we draw our Fibonacci from here, the origin of the trend, to the first end of the swing point. So we have our A, B pattern. Then you can see we have a nice retracement here. And the idea from our Fibonacci extensions is that usually you will choose your target with the 138 or with the 161.8 Fibonacci extension. So generally what some traders do is that they take the first exit on the 138 and then on the 161, the second one. Some traders, if you really want to bet on having or finding a huge trend, you could even think about the 200 Fibonacci extension, but that's not as common. And if you do that, you will see that a lot of trades will turn before that. So it's always a good idea to scale out before that. And this is how it looks